Hi, this is Jason from Silent Innovations. In this video, I'll talk about how we can go about creating the limited liability company in Michigan through a website called freellc.net, and also explain the choices that you can make as you go through the process. And while doing that, I'll also touch on some advanced concepts like capital accounts and profits interest. So here's the website. It'll be updated from time to time, so it might look different when you visit it, but it will have a button that says start drafting or something to that effect. And when you click on the button, it'll bring you to a screen that looks like this. Basically, the website will ask you questions, and as you answer them, behind the scenes, the application is completing the documents. You can actually see the underlying agreements, what it looks like by clicking on this eye icon. So behind the scenes, one of the documents that you're actually creating simultaneously is a summary of the terms of your LLC. So you can easily see all the important information about the company without having to read the agreement cover to cover. And when you set up the system correctly, you can be sure that the information gets transferred from one document to another because computers don't make that kind of transposing mistakes. We humans, on the other hand, we make that mistake all the time. And that's part of the reason why automation is so helpful. By the way, at any time, if you want to stop and generate the documents, click the PDF button and you can generate the document. So if you click on this arrow here and this all documents, you could download all the documents all at once in a zip file. So when you do that, even without having finished all the questions, the blanks will have placeholders for things like names and dates. And for something that requires an answer, there'll be a default decision made for you. I tried to make the default decisions sensible, but obviously you need to take a look at it and make sure that it works for you. So let's go down the list. The first is the name of the LLC. Once you click on the general idea area, it'll also tell you a bit more about the question. So it'll tell you you must include the words limited liability company or the letters LLC or LC with or without periods. I think the most common is LLC without the periods, and a lot of times people put a comma before it. So the big company, comma LLC. Okay. The only thing I would say about that is that if you do put a comma there, make sure you remember that and do it consistently all throughout. The LLC duration and purpose, just keep it as perpetual and lawful purpose. I don't think this is a place where you want to be creative. I'll just leave it at that. So the next question is interesting. How is the ownership percent determined? Obviously, ownership percentage is one of the most important things to consider when creating the LLC, but how are you going to determine it? I think there are generally three ways to do it. You could split it evenly, or you could just agree to some arbitrary number like 60-40, or you can be a little bit more precise and try to add up the value of your contributions and calculate the percentage out of that. And that would be this option. So this adding up the numbers works better when there are more members. If it's just two of you, you don't want to be in a situation where someone ends up with a little bit more, and it might not be intentional, because they could be contributing inventory or land or whatnot, and then that person ends up having the majority, and then you might not have expected that. And it's also because the ownership percent can potentially have impacts all throughout the document. Next is profit allocation. The ownership that we talked about just now is how the money gets split when the company gets liquidated. Profit allocation, on the other hand, is how we're going to split the profits of the company. And oftentimes it is based on ownership, but it can be different depending on what you agree to. You can have ownership be 60-40 but split the profits 50-50. And when you want to deviate from the ownership, you can pick the profit separate profit interest option. So what is this capital account in the option? You know how I mentioned to you just moments ago that the ownership could be determined based on adding up the values of contribution? So this capital account concept, it takes that idea and runs with it. So even when you didn't choose that option to determine the ownership, the accountants or the accounting software that you're using or that you will be using still have to keep track of this the contribution amount to do your books correctly. So behind the scenes, it will sort of always be there as long as you're using an accountant or software, and it's going to keep track of all the contributions that you ever make to the company, all the money that you ever take out from the company, and then the capital account goes up by your share of profits, and it also goes down for your share of losses. And this capital account concept, you can base your profits on that. So sometimes people know what it is, but they don't know its purpose of the capital account. And sometimes it's helpful to know sort of why it's there. And the purpose is to tell you your sort of deserved amount of distribution. If not today, if not this year, then at liquidation. So let me give you an example. Let's say you put in $100,000 into the company, and your partner Bob, he's going to put in $20,000. But since he's going to provide services to the company, you decide, okay, let's split everything 50-50. And then let's say that like soon thereafter you're starting the business, before the year's over, you get sued. You end up in a lawsuit. And then after some back and forth, you countersue or whatnot, you end up winning $1 million. And you say, I've had enough. Maybe this is not the right business for me to go in. Decide to dissolve the company. Then it seems only fair if you get your $100,000 and Bob gets $20,000, and then split the money 50-50, right? I mean, you don't want to do the 50-50 too soon, otherwise you're sort of getting less than your deserved amount. So, well, that's what capital account does to keep track of sort of your score throughout the journey of the limited liability company. So the next point is the distribution allocation. Okay, that's when the company decided that it's going to pay the members and determine some amount to be paid out. And so you have this pile of cash to be paid out, and this essentially answers the question, how are we going to split that pile of cash? Knowing how profit allocation is different from distribution allocation is key part of understanding how all this works. And now that you know all of these options based on ownership, equally shared, or capital account, I'll leave it up to you to decide. But you'll notice that you can end up in the same result while choosing different options. So if you can choose to split evenly, or just have agreed owner percentage set at 50-50 if there are two owners, and so the wording might be different, but the end result would be the same. Next point is voting interest. It's common to have it tied to the ownership. It's perfectly fine to deviate from that as well. So in that case, you would choose a separate voting interest. So one thing I would note about this is that if you base your voting on capital account, in this case, you could have a situation where there are negative balances on capital accounts, which means that those people with negative balances won't be able to vote. So be on the lookout for that situation. And for that reason, I personally don't love it. but you'll see plenty of operating agreements drafted that way. Now the application asks you about the members versus managers. I've discussed member versus managers in previous video, video number 2 in the website. So I won't go into detail, but essentially gives you 3 options. So first, you can have every member have management powers. In that case, you would say no to the second question. Okay. And by the way, by management powers, I mean right to make decisions on day-to-day operations, and for more important transactions, the ability to vote on the outcome of that transaction. Now, second, you could limit the management powers to only certain members called managing members. So in that case, you would say yes to that question. In that scenario, the LLC is managed by members. So you can't have managers, but only some of the members will be able to manage the company. So by the way, you can have more than one managing member. And finally, you can have managers. Managers can be members or non-members. Just a note here, I personally don't like mixing managing members with managers. So if you are a manager managed company, then you happen to be a member with management responsibilities, then call yourself a manager rather than a managing member. In this case, if you choose managers, you won't even ask you about the managing member. So there's a little bit of a safeguard built in there. So the next items are voting thresholds. So if you want to transfer your interest, and the question is, do you need other members' consent? And this is an important point because the person you started the business with, I'm sure you didn't just pick them out of a hat. So if the person decides to sell his or her portion, the other members probably want to know who it is they're selling it to, and have a say on whether to continue on with a new partner in the business. So that's the default rule. They need the unanimous consent. But as organizations become larger, it becomes harder to maintain that. So one thing to note is that if you have a manager managed LLC with members who are mostly just investors, they might actually want to be able to transfer their membership without any consent, and that's why you have this some interesting option here, which is none. Next item is the threshold for the admission of new member. Sort of similar in concept. A company's ownership, remember, a company's ownership can only add up to 100%. So when a new person comes in, it's going to lower everyone else's percentages, and that might have an impact on your distributions and so on. So again, the default rule is unanimous consent, but 100% is hard to maintain in a large organization. So you might lower that. So there's one important aspect about this. When a member dies, by operation of law, that membership interest is going to be assigned to the dead member's estate. But you haven't been admitted, the estate hasn't been admitted as a new member yet. So what happens in that case? What happens is that you get your distributions. You have the right to receive your distributions. So economic rights are transferred, but you don't get the management rights. So you don't get to vote until you are made a member. Dissolution is when you want to liquidate the company. The default rule in Michigan is unanimous vote, but I think there are good reasons to set it a little bit lower. I've put the to 2/3 as sort of the default option, and the reason why you want it, at least I personally like it a little bit less than unanimous, is because you don't want to be deadlocked or stuck in a toxic business relationship. So that's all for the voting thresholds. I might add more items in the future, whether it be voting thresholds or something else. And I might not update the video to reflect that. But in any case, you'll still have help text, so you should so that should help you somewhat. So next is tax election. By default, LLCs are taxed as either sole proprietor or partnership, depending on whether it's a single member LLC or multi-member LLC. If you want to be treated as an S Corp or C Corp, select corporation. Otherwise, stay with the default. But doing a corporation is beyond the scope of this application and project. So you have to jump through a lot of hoops to make that happen. So you definitely need to talk to a tax professional if you're going to that route. You can still use this document as a starting point, but they might need to make edits, or they might ask you to use their own forms. So for fiscal year, the calendar year is the most common. I won't change it unless you have a very good reason, and I'll just leave it at that. And now you've made most of the material decisions. Most of what's left is putting in the personnel information. There are some special clauses that I'll hit near the end. So organizer is the person who forms this LLC. It can be anyone really. It doesn't have to be a member. And if the state accepts or rejects your application, that's the person they'll reach out to. Resident agent. So resident agent, by the way, other states call it registered agent. So you might see some instances of registered here. But in any case, that's the person that receives official notice, whether it be from the state or from the federal government, IRS, and most importantly, service of process, which means a receipt of document that starts the lawsuit. So you need to be available to accept, to be able to be reached by people who want to sue you, essentially. So fill those names in, and if you want to allow email to be a valid form of notice, official notice in the context of this agreement, by all means select yes. I think it's becoming more and more acceptable to allow email in contract context. So finally, we are at the last section, the special provisions. So the first one is the tax distribution clause. And as I mentioned before, profits and distributions are different. And you have to pay tax on the profits, not distributions. But you have a situation where the company is making a lot of money, but for some reason, maybe because it wants to plow back all the money to grow fast, it's not paying out the distributions to the members. That's called phantom income, where you have to pay a tax, but you don't have the cash to pay it. And the tax distribution clause forces the LLC to pay so that you won't have that issue. And as to the determining the amount, a lot of operating agreements, including this one, uses a hypothetical person living in New York City. So this New York is not a typo. Instead of relying on some number like 37% or something like that, which could change over time depending on sort of the political climate. If you enable this, it will show up in section 3.5 of the document. And right of first refusal. So that's the obligation that the seller of a membership interest has to present an almost done deal to the existing members so that those members have the opportunity to buy their partner out. So you can't get around it by lowballing the members and getting the deal done with someone else. The deal with someone else is the one that has to be presented to the existing members. So so they could sort of snatch it from the jaws of victory, if you will. It's good for existing members, not so good for selling members. But I think most people anticipate that they'll be the existing member. But be careful with it, because you could end up being the sort of the selling member. Anyway, moving on. Next parts are non-disclosure and non-compete clauses. They are pretty self-explanatory. You can read about them in the help section. Some people swear by it, but I don't always see them. It's much more common in employment agreements and service agreements. with an entity that's not an employee. But if you're not going to have those kinds of agreements in place with the members or the managers or officers or whatnot, it might be a good idea to have them in here. And the last item is stock options and quotes, because they are not really stocks. They're actually profit interests, which we talked about earlier. But in order to not have them be taxable when you issue them, you need to jump through some hoops, some of which are explained in this help text here. But in any case, it's beyond the scope of this application and the project. So you definitely need to work with an attorney to build that concept in. And it would be, and some of these sort of quote unquote warnings will be repeated in the instructions. Okay. So now that you've answered all the questions, you can export it out, export them out using the PDF button right here, and click on the down arrow, and once you click on all documents, all the documents will be downloaded at once in a zip file right here. So I hope you found this information helpful. If you did, please give it a thumbs up and subscribe. Thank you and good luck.